Good morning and welcome to this Wednesday, August 9th, 2023 edition of Trading Places Live at earningsbeats.com. I'm Tom Bowley, Chief Market Strategist here at Earnings Beats, and I'll be your host as we take a look at what's going on this morning and what we can expect for the trading day today. We're one day away from a big CPI report. The July CPI report will be out on Thursday morning at 8:30 a.m. Eastern. That I think holds the cards in the short term for the market. I think if we have a disappointing report, if it's higher than expected, I think we could see more of what we've seen over the past few weeks, movement away from the QQQ. Many of those large cap technology names, really anything that grows fast would probably be hit with that type of scenario, because when you do valuations, you're looking not only at earnings, but you're looking at earnings growth as we look forward, and inflation eats into that growth. So, we saw what happened when we had inflation problems early in 2021. Growth stocks got absolutely trashed. I don't expect anything like that because I believe the market is already anticipating a continuing drop in inflation. But in the very near term, if we get a surprise, that's what I'm talking about. I think that could take the NASDAQ in particular even lower than what we've seen here of late. Now, whether or not we actually see that kind of a higher than expected inflation report remains to be seen. And if we do come in at the expected level, which is a rise of 0.2% at the core level, and I like to follow the core level much more than the headline number. I think if the numbers come in right around that level or below, then I could absolutely see a resumption of the secular bull market advance that we've enjoyed in 2023. But that's coming out on Thursday morning. Then on Friday morning, we get the PPI. July PPI will be out. I don't pay as much attention to that. I think that the Fed watches the increase that's passed along to the consumer much more. But both reports will be big, and potentially the PPI, I think, if anything, might have a little bit. I'm actually going to just look at something real fast. One of the things that goes into the PPI, and this is off of memory, I'd have to go back and double check this, but I think it goes from, I think when it's looking at crude oil prices, it goes from the 12th of one month to the 12th of the month before the report comes out. So for instance, the July PPI report, I believe when they look at crude oil prices in the headline number, they're going to look at the June 12th crude oil price versus July 12th. And I just looked at a chart on my other computer here, and June 12th, crude oil prices were at $67 a barrel. And on July 12th, we were up at about $76 a barrel. So that's about a 12% increase roughly in that 1 month period. And that could show up in that PPI report on Friday morning. Now it's the headline number. It's not the core number, but we know what media does with these numbers. And so just at least keep that in the back of your mind that perhaps we're going to get a higher headline number on Friday than we expect. And both the headline number and the core number for both the CPI and PPI, all of them are expected to rise 0.2%. So that's a number to watch in these reports next couple of days. All right, let me get going here. I think we are ready. Here we go. So let's go ahead and take a look at the action from Tuesday. It was really poor, morning action, which is what we've grown accustomed to over the last year to 15 months. But it was another day. I think I said it yesterday morning. Yeah, we're getting a gap down, but let's see what happens the rest of the day. Well, the rest of the day, you saw what happened. We had more buying coming in. Dow Jones Industrial Average did finish down, however, for the day, down 159 points. That was about between 4 and 0.5% lower. S&P 500 down 19 points. That was about 0.4% lower. The NASDAQ 100 down 135 points. That was about 0.9% lower. Mid caps down 24 points. That also was about 0.9% lower. And then small caps. Okay, I'm not sure what the heck is going on here. That was a pretty weird chart. I think the small caps finished down. Yeah, I'll tell you what, if the small caps are down 92% yesterday, I'm in trouble because I had the TNA. I don't know, there's some kind of a misprint there at stock charts this morning. But I want to say that the small caps, and we could pull up the IWM. Tell you what, let me edit this. And this morning, instead of the SML, we'll delete that. And go with the IWM. Hadn't even noticed that this morning. That was pretty strange. I've thrown the IWM. It's not exactly the same as the S&P 600 small cap index, but it is small caps. And you can see the IWM down yesterday about 0.6%. Now, small caps were getting hit a lot harder than any of the other groups in the morning. So this was another indication of the intraday rotation that's been taking place from the large cap area to the small cap area. The relative strength intraday has been going up now for the last couple of months. And I think it portends a big move to the upside in the IWM. I really want to see the IWM clear 200. I think if it clears 200, we could have another 15 to 20% rise in that index fairly quickly. And you wouldn't have thought the QQQ was going to do that, but that came on the heels of very similar rotation. And then we saw what happened to the QQQ and the NASDAQ, the big tech names, XLK, XLC, XLY, all of them absolutely exploded this year. And I think we're about to get some of that rotation. I think we've already seen some of that rotation into the IWM. But the IWM hasn't made the big breakout yet. And what I'm talking about here is going back, and we can stretch this out just a little bit longer so you can see. The IWM, you can see right up here around 198, 199. That was the high in August of 2022. That was the high again in February 2023, and was just the high again at the end of July. So moving back up now off of this 20-day moving average test and breaking out above 199, 200, watch for that, because if it happens, that would be a very significant break back to the upside. We actually had a slight breakout at the end of July, but we failed to hold it. And normally when that happens, you go down, you get a 20-day test, and then you break back out to the upside. At least that's what I look for. And right now, with the reversal we've seen the last couple of days on the IWM, and we can take a look. I mean, look at the morning weakness here. And this was back on Monday. And then there was buying rest of the day from 10 o'clock on. Look at the selling yesterday, down maybe to about 10:15 in the morning. And then look at the recovery all day long. Much, much stronger. Look at how it finished well above the open. If I pull up something like the QQQ, we rallied after about 11:45, but we never got back up to the opening high. And that's that rotation I'm talking about. So the IWM got off to a horrible start at the open, much worse than the NASDAQ. But by the end of the day, it was better than the NASDAQ. And that's that rotation that I continue to see. And that tells me small caps where you want to be focusing, especially if we get that breakout above the 199, 200 level. All right, let's go back because I want to go over the industry groups and the sectors. So looking at the sectors, strength yesterday we saw in healthcare, energy, and the weakest group was materials. Healthcare up 0.77%. Pharma's over here, you can see a big day, up almost 4%, a big breakout. Now on a relative basis, and even on the AD lines, hadn't been looking very good. I suspect now with this breakout, probably going to see this group start to perform better. I don't believe they're going to be a relative leader. I think that once this consolidation period's over, I think we're going to go back to leadership from those aggressive groups that we're used to. Maybe not fully technology and communication service and discretionary. We might see a little bit more leadership from industrials and financials. Financials I found very encouraging because yesterday Moody's downgraded 10 banks. They basically put several other banks on notice for a downgrade. And the financials obviously took a big hit yesterday morning. That was one of the things that caused the market to go down so much. But the balance of the day was nothing but buying on banks. So yes, okay, it was a downgrade. It's kind of like, to me, a company coming out with poor earnings after they've been, you've seen relative weakness for so long, or really good earnings after a relative strength. The Moody's downgrade was really looking in the rearview mirror. I mean, was anybody surprised? I certainly wasn't surprised. I mean, not after what we saw back in March. First half of March, banks were absolutely bludgeoned. So am I shocked? I mean, many of them still haven't really recovered on a relative basis. So am I shocked that some of them are being downgraded by Moody's? No. To me, it's old news. I think it's already in the price, which is why we saw the big rally yesterday off of that gap down. Anyhow, materials weak yesterday. You can see down 1%. That was your weakest sector. Looking at a couple of other industry groups, publishers made a breakout yesterday, rising almost 4% as well. And airlines been kind of, a little bit of a sleeper of lately, been under the radar because we got up to 200 or slightly above. We pulled all the way back down to almost 170. So that was almost a 15% drop. I think it was just profit taking. Look at where the last rally started from, 170. And look at where we started to turn yesterday, back up off of 170. Yesterday, the airlines were up 1.66%. Don't be surprised if we see continuing strength on the airlines. Watch that 170 level, though, as support. Ten-year Treasury yield. Okay, no economic reports out of significance today, but as I mentioned earlier, tomorrow and Friday, we've got the CPI and the PPI respectively, and all the numbers, headline, core, where we're looking for 0.2% rise, which would continue the downward spiral that we've seen in inflation for the past year and a half. So I wouldn't be surprised. I think the one number I'm most concerned about would be the headline number on the PPI on Friday because of crude oil prices. Other than that, I suspect that we are going to see fairly tame numbers. And if we do happen to come in at the core level at or below 0.2%, we could see a big gap up in the market. We've been beaten down here for a little bit. I'm going to want to have something for sure. I don't know exactly how invested I'll be. I really like the market through the balance of the year. I know we have to get through the rest of August and September. So it's really kind of this bridge that I'm looking for to get us from here to the start of pre-earnings run, late September, early October. These next 7 weeks are probably the weeks that, if the market is going to put in a scare before we go to all-time highs, I think this is the period. So I'm not 100% comfortable, for sure, not 100%, that we're going to just simply go higher in August and September. It may be, this whole consolidation period may drag out for a while. Anyhow, 10-year Treasury yield this morning, you can see right now we are down just slightly. Down about, we're down to about 4.02%. Watch the 20-day moving average. That is currently at 397. So if we were to go down below 397 and close there, I really think 370, 375 could come into play. And we could get there quickly, depending on how, this 10-year Treasury yield is probably setting up to go either much higher or much lower. And Thursday and Friday will have a lot to do with it based on the inflation numbers. All right, S&P 500. So there is your long tail to the downside. We had set a new recent low and then rallied back, got all the way back up essentially to 4,500, 4,499.38. Still below the 20-day moving average, though, where we have now closed 3 of the last 4 days, maybe 4 of the last 5. I can't tell if that week ago, whether or not that was below. It looked like it probably was. So this is probably the 4th day in the last 5 that the S&P 500 closed below the 20-day moving average. But don't rule out just simple consolidation here for a little while. One way to reset the PPO and the 50-day move and to test that 50-day is to go straight down and test the 50-day. Another way is maybe to kind of meet the 50-day in the middle. Prices come down a little bit, yes, and the 50-day keeps rising. Eventually you squeeze and you get that test on just sideways consolidation. One way to look at it here, back in March and April when we moved up, notice we just went sideways. We never went down and hit the 50, but essentially that 50 was starting to turn back up. And so it was kind of a, middle of the road kind of a thing. And that wouldn't surprise me here either. So I think still to the downside, I'm watching maybe 4,400 to 4,420. And to the upside, obviously, would be the recent highs up near 4,600. And we're sitting right squarely in the middle at 4,500. So I'm not going to be shocked to see the S&P 500 move in either direction here, maybe 2%. But breaking below the 50-day and below the 4,400 level, I think that would then bring in 4,300. That would probably get us a VIX up to around 20, if not even possibly and temporarily above it. But I think we could see a VIX at 20. The flip side is the bullish argument, which I would never rule out when we're in the middle of a secular bull market. And I know you might be saying, well, pick one, which side. I don't know which way we're going. Honestly, I don't. I believe long-term we're going higher, but how we get there in this bridge, how this bridge unfolds between now and the 4th quarter, I don't know. I suspect that we're going to see small caps lead. I suspect that we're probably going to see a little bit more strength from value, but depending on the CPI and PPI report tomorrow, that could all change depending on what the Fed does later this month. There's so many question marks. I feel very comfortable with my signals for the long term. Short term, it's a crapshoot. I mean, honestly, you can look at 60-minute divergences. That helps sometimes. You can look at candles and patterns. That helps sometimes. But I think of it more of just an uptrend and a range. And so I think worst case, I think we go back and threaten 4,300. Best case, we don't even hit the 50-day and we're back off to the races, setting new highs the next week or two. Which way we go, I honestly don't know. Anyhow, that's kind of the where I view the S&P at this point. The NASDAQ has almost gotten the 50-day test. This was the worst in terms of the negative divergence. Clearly higher prices, clearly lower PPO. There's your ABC pattern back down to test this double top around 15,250. We closed yesterday 15,273. 50-day moving average is at 15,103. So, 0.5 to 1%, and basically we're there. This could already be it. You can see the PPO getting close to the center line. This is what we look for. This is what I call a PPO center line reset. That basically gets us to the point where there's no momentum. If you know what the PPO is, which is the difference between any two EMAs, and I always use the default, the 12 and 26 period. This is a daily chart. So the PPO is nothing more than the difference between the 12-day EMA and the 26-day EMA. And when you get to zero, that means that there's no difference between your shorter term moving average and your longer term moving average. At that point, momentum is right. It's flat. It's at the zero line. So I think we're almost there. I mean, we saw the PPO up near 3. Now the PPO is at 0.58. Maybe we go to 0. Maybe, look at what happened back in April. We went below the 20, didn't quite get to the 50, didn't quite get to the zero line. And then we were back off to new highs again. So I wouldn't be sitting back waiting to get an exact 50-day test or to get that PPO at 0 before I considered buying. I'm remaining long. The big thing for me is whether or not I want to be in leverage, which I'll show you next. The IWM look at these tails coming off of these lows. When it is moving down, for the most part, you can see it's gap downs. Since we were at 199 and yesterday we hit 190.52, there is almost zero in the way of red filled candles. A red filled candle like this one over here, like these two, this is where you open and you sell off throughout the day and you close way below the open. When you have a close that's well below the open, you'll see a filled red candle. Or in the case of a filled black candle, that's when you gap up and you sell off a lot, but you still close above the prior day's close. So it was an up day, but it was a sell-off during the day from the gap up open. That's how you get a black candle. The red candle is simply you finish lower for the day and you have a lot of selling intraday. But look at these last 6 or 7 candles. I mean, I'm just not seeing a lot of distribution here since we've hit that high. Yes, we went down below the 20-day. Here we went down both these instances below the 20-day and came right back up. So what am I looking for? I'm looking for a move back up above that 20-day moving average. And if we can get that and continue our push back toward this 199 level, as I said earlier, just beware. I believe it would be incredibly bullish for the IWM to make this breakout above 199 to 200. Transports, pulling back again over the last few days, but all of these hollow candles showing lots of intraday buying. Look at the selling. Again, it's mostly these thin bodies, very little change from open to close, and yet we're working our way down. I say it's manipulation. We'll see what happens. All right, chart of the day. If you're a fan of the chart of the day, you really need to subscribe to our free Earnings Beats Digest newsletter. It is a very simple read. It's 2 paragraphs and a chart. It'll take you all of about 2 minutes, maybe 3, if you're a slow reader. But if you scroll down, we have an area to sign up, name, email address, hit that subscribe button. Again, it's free, no credit card required. You can unsubscribe at any time. The chart of the day comes out Mondays, Wednesdays, Fridays, normally around 8:30. Sometimes they're a little bit later because I'm a little bit later, so you can blame me. But Monday, Wednesday, and Friday is when you'll see those. And just trying to, provide some education, all the things that I've learned over the years in the market, try to pass along a lot of that. And it's free. And when we have free events, we reach out to our Earnings Beats Digest community. So multiple reasons to be a part of that group. Make sure you sign up today. All right, what's the chart of the day today? Well, yesterday I got into a trade, and I'm going to talk about this a little bit later. We have a live trading room that's coming up at 10 a.m. this morning. We do this every week. If you do want to subscribe to our service, our paid service, you can start a no-cost 30-day trial. You will need to provide a credit card, but there'll be no cost for 30 days, and you can check things out. This trading room that we have is a weekly trading room from 10 to 10:45 Wednesday mornings. That's Eastern time. And so it's while the market is open. And I go in and I show a lot of the strategies. I show a lot of the things I look at in the morning to try to get ready for the trading day. I think you'll find it, helpful. If you're looking for instantaneous wealth, I'm not sure that I can provide you that, but hopefully I can improve your trading or help to improve your trading strategies and techniques. But anyway, this particular trade, Confluent, this was a company that came out. I'm going to see if I can find my, here. So here is what Confluent did. If you look at this, and I'm going to annotate this. First of all, I'll make this chart a little bigger so hopefully everybody can see it. And we'll even go back. Let's cut this back to 6 months. Okay, and then I'm going to annotate it and then I'll read some numbers to you. Okay, this particular line right here. So you see this big volume? Hopefully you see that big volume bar, but if not, I'll make sure it's evident right there with that blue arrow. 12 million shares traded hands just 3-4 days ago. And this was the day that Confluent reported its earnings. And they also raised guidance. And so the stock had been downtrending. It had been a leader for a while, but then was downtrending. And they came out with their earnings. And one day after breaking down, probably triggered a lot of selling. Probably folks thinking, okay, what do they know? What does Wall Street know? Must be a bad report coming. That's things that goes through everyone's head, when you're trading, and especially when you're sitting by yourself on an island and you own the stock. If you own the stock, it's much worse because you've seen this relentless push to the downside, and you're like, I'm not going to sell unless we break this trend line or this support level. So what did we do the day before earnings? We broke the level. And look at the volume increase. Prior to the day after earnings, this was the heaviest volume day for the last 6 months, the breakdown. And then earnings happened. Let me read to you what Confluent came out with. So they were expected to lose 6 cents in their last quarter. They were flat. So they beat by 6 cents. Then they were expected to come in with 182 million in revenue. They came in with 189 million in revenue. So an easy beat there, about 4% above. But then they significantly raised their guidance. So they announced that their fiscal year 2023 revenues, which were supposed to be 694 million. That was the estimate that was out there, 694 million. They raised it to 767 to 772 million. That is a substantial, that's 10%, substantial increase in fiscal 2023 revenues. Then from an earnings perspective, they were supposed to lose 15 cents. They cut the loss to between 2 and 5 cents. And then this candle happened on this kind of volume. So we had the gap up to 32.5. This was from 31, gap up to 32.5. The very next day, we hit 38. We had gone up over $6 in 2 days. That's, well, and up more than, probably from the low on the day before earnings of 30.5, getting up close to 38.5. I mean, that was $8, which was about a 27% move in 2 days. The company is entitled to see a little bit of profit taking, which is what we saw the last 2 days, the volume coming down. We saw the reversal on the second day after earnings, and then we came down, almost got to this gap support, and then yesterday we touched it. This was 32.55, the open. Do you know what yesterday's low was? 32.51. 4 pennies below this support level. It was a second chance. I call it returning to the scene of the crime. Of course, in this case, it wasn't a crime. It was a good deed. But we returned right back to where we had been just 3 days earlier with the good news already out. We saw the reaction. We saw the buying. And here, the market's giving us a second chance. I find this to be incredibly attractive from a trading perspective. These are the kinds of trades I look for. I actually put Confluent on yesterday, and as a trade, as it approached that gap support level, and we saw a big rally back. I'm going to be going through our raised guidance chart list because Confluent was on that. It's actually on our updated chart list. I'm actually prepping the new raised guidance. I mean, it takes forever. I worked on it almost all day yesterday because I was working on last week's earnings, which was the biggest earnings week of the season. I think over, 1,400, 1,500 companies reported last week. So it's a lot to go through all the raised guidance. I'm slowly but surely getting there. But I have updated it on my own chart list through, I think it was through August 2nd. So August 3rd is the biggest day. I've got that to do. And then the last couple of days, last Friday and a couple of days this week. But I will, by the end of this week, I'm going to have it all updated. Well, I'll send it out to everyone. But I do have it updated through August 2nd on my own personal chart list. I'm going to go over some of these charts that I've added. And maybe we'll show how to set up some alerts, price alerts on stock charts. Because here, the beauty of a gap support level is it's 32.55 here on CFLT. That's the number. We don't have to say, well, somewhere around 32.5. No, I know the number. It's 32.55. So you can set a price alert for like 33. So at least you know when it's getting close, and you can take a look at the chart, see if anything's changed, maybe look at the industry group it's in or the sector, and try to make a determination. Okay, do I want to commit? How much do I want to commit? And go through all these things before you get down to that 32.55 level. Now, I like to watch it. And if it gets down and I see it go down to that 32.55 level, I like to put my market order right then and there in. Even if market makers, fill me at 32.70. I've done enough where if I set a limit order at 32.55, I've seen enough times where the low of the day is 32.56 and I don't get it. I don't get my fill. Limit orders, market makers can see those, but they don't know what you're thinking. So I wait until I get right down to the price I like to buy. And of course, it helps that I follow the market all day and I'm right in front of my computer screen. I know many of you probably work throughout the day, but I think that's why these price alerts will help you. You can set it up so that the price alert will be sent to you on your text via text on your phone. You can have it so that it's set up as a banner that comes up on the stock chart site. So if you happen to just be on the site throughout the day, it'll come up and tell you. And it'll also send you an email. So pretty cool system that Stock Charts has. Anyway, CFLT was the chart of the day. It is just past 9:30. I did want to just mention two things. One, Eli Lilly, big day yesterday. This is why the pharmas had such a big day. They blew away their earnings estimate. They raised guidance. Eli Lilly taking over leadership role in the pharmas. I don't know. We could certainly see a pullback. I'd like to see how it trades today. I think the first big level is going to be yesterday's open at 506. If we close below that level, I think the odds of moving back down closer to 460, 470 increase. So I'd watch that level. The other thing I just wanted to mention briefly, here is a stock on the on our raised guidance chart list. This is the one that I'm updating, and I should have it ready by the end of this week, which will be August 11th. But look at they came out with their earnings, they raised their guidance, and the stock goes from 110 and change up to about 117.50 at the open. And it's continued to go up. And maybe it just keeps going. Maybe it doesn't come back. But what I always do in our raised guidance chart list is I put this black dotted vertical line to mark where, the timing of when this raised guidance occurred. And many times it's when earnings come out. They'll raise guidance at the same time. Other times it's mid-quarter. But anyway, this is just marking so you can visualize where it, when it happened on the chart. And then I put in what I think is the biggest price or gap support area on the chart. Occasionally I'll put two support levels in. But this is one, global payments. I could hit this inspect button and I could go here and take a look. It was 117.17 open. So I could go into my alerts and maybe put 117.50 or 118 so that stock charts will notify me if this stock gets back down to that level, which means it's getting very close to the gap support. I could go right in and buy there, or I could say, hey, I'm going to go ahead and hold off, see if I get this back down. If it does come back down, it also may hit price support, gap support at the same time it hits the 20-day, which would be another reason to buy it. PPO is awesome, breaking to new highs. When that happens, normally I like 20-day tests. So right now, 20 days at 115.81, and we know 117.17 is the gap support. So in that range, I think that is an excellent area to enter a stock like Global Payments. This is one of 300 stocks that are on our raised guidance chart list. And by the time I'm done, by Friday of this week, there'll probably be 500 on here. I'll probably be adding at least another 200 or thereabouts. Anyway, we're going to go over this in more detail in just a half hour. So hopefully you can join us. If you're not already a member, again, go to Earnings Beats, hit the 30-day trial. You'll get the next 5 live trading rooms for free. So you get today's and then for the next 4 weeks, because that's 28 days and you got a 30-day trial. So be sure to check this out. I'm also we're looking to do a live trading room for an entire day. We've done 2 of these in the past. They were huge successes. Members loved them. And so that way we can kind of follow trades throughout the day. But we're going to have one of those coming up. So now would be a great time to check out the service for the 30-day trial. All right, market's open. So let's see what we got going here today. Well, we got a little bit of mixture. All right, small caps, you can see are up 1,158%. I'm retiring today. I'm just kidding. I don't know what's going on here with the small cap, but though I guess I'll have it straightened out later today. Pretty flat right now, maybe a little bit of a bias to the upside. The VIX down about back down to 1574, so it's pulling back a little bit. Let me see the IWM to get a real. Well, we're back down a little bit on the IWM, but again, morning weakness. We have seen it there, here, and now we're seeing it again today. I'll say the same thing that I said yesterday and probably the day before and the day before that, and the week before that, and the month before that. Let's see how we close today, because to me, the closing is the biggest part. If we can't get back through that 20-day moving average on the IWM and we sell off all day, that I think could lead to a test. If you look at a daily chart, maybe down around the 188 area, that's where we had this double top breakout that we haven't tested. And that also now is where the 50-day is. So I think we're going to do one of 2 things. I think we either break out above the 20 and go to all-time highs, or if the market stays somewhat compromised here, I think we could get down to that 188 level. That would be, I think that would be an amazing entry point. I'll be down quite a bit if I decide to hold the TNA all the way down there. I have to kind of, and I probably will, to be honest. I mean, looking at an extra 2 or 3%, I'm not sure that I want to be out of the IWM when it makes the move. I can promise you, if I decide to get out of the TNA, that's probably going to be the bottom and we'll be ready to move back up. So sometimes I just prepare myself for maybe the worst case, which I do think is right around that 188 area. All right. Again, there's where we are, a little bit red this morning now, and futures were green. Maybe we pull back in the morning. Maybe this is a distribution day. I don't know. We'll play it by ear and we'll be ready to go with another show tomorrow to let you know what's going on. Again, come see me in how long? 23 minutes. Live trading room begins. Thanks for watching. If you're watching on YouTube, our live stream, click that like button below and make sure you subscribe, turn your notifications on so that you will be kept up to date with all the things we do at Earnings Beats. Have a great day, everybody. Happy trading.